Namaste. Myself CA Pramod Jain, and sorry for being in the casuals because I am sharing this video during this lockdown of COVID. Uh, I want to share some very basic thing about applicability of CARO. We all know that CARO 20 has already been extended. Now, CARO 2020 is not applicable with effect from 1st April 19 accounting periods, but accounting period on or after 1st April 20. But I'm not talking about that. I'm talking about the CARO which would be applicable even for the financial year 1920 or 2021 both. I'm just talking about the applicability of the CARO, whether to the company which we are auditing CARO is applicable or not. We all know that CARO would be applicable to all companies, including foreign companies. However, to whom it is not applicable? First, it is not applicable to a banking company. It is not applicable to an insurance company. It is not applicable to a Section 8 company, Section 25 company, which was in 1956 Act, a one-person company, a small company. For the financial year 1920, it is not applicable to the consolidated financial statements, CFS. And also, if there is a branch, the branch of a company, the company to whom the CARO is applicable, to its branch also it is applicable. So apart from this, what is not applicable is a private company who satisfy, the exemption is to a company which, private company which satisfy the three conditions, all the three conditions cumulative. First, that the private company should, of course, it should not be a subsidiary or holding of a public company whose paid up capital and reserve should be less than rupees 1 crore as on the as on the balance sheet date which we are auditing. And for this purpose, the capital and reserves, it includes my bonus shares, my preference shares, all are to be included. Of share application money, no, it is not included because that is not a paid up capital. But all reserves are to be included, which includes my revaluation reserves also. It includes my revaluation reserves. So a private limited company whose paid up capital is less than rupees 1 crore, and a private limited company which is not a subsidiary or holding of a public company and whose outstanding loans from the banks or financial institutions is less than rupees 1 crore during the financial year. And for this purpose, one should be very careful that what does this outstanding loan include. And it includes any maximum, any balance which is maximum throughout the year. And it includes all borrowings. All borrowings, even the short term or long term, both are included. Non-fund based borrowings, they are not included. But when they are included, they are only included when they are, to the extent they are devolved or invoked. The guarantees, the devolved LCs, whenever they are devolved, then the demand is created. That is included. That is included in the limit of that loans. The term loans is included. The interest accrued and due only is to be considered. Interest accrued but not due is not to be considered. For the CC limit, the balance as on any day during the previous year, that is to be included. Even if I have got a fixed deposit against which I have taken an overdraft, that is also included in my borrowings, in my outstanding loans. The outstanding dues to a credit card, that also is to be included. And my foreign banks, they are also covered. One question which is always asked is whether loan from NBFCs are included or not. Yes, loans from NBFCs also included because they are financial institutions. Loan from another company, not included. Loan from directors relatives, they are not included for this purpose. So for a private limited company, the three conditions: first, paid up capital less than 1 crore. Second, my outstanding loan from the bank and financial institution should be less than 1 crore. And the third condition, that a private company, which is not, of course, a subsidiary or holding of a public company, whose total revenue, including the discontinuing operation, should be less than rupees 10 crore as per the financial statement as per my schedule 3. So my total revenue share should be less than rupees 10 crores. So other income here is included. So everyone, I suppose, should be very clear about it. Just to take a simple example, which I have seen during various seminars that our members have faltered. Let us take a very simple example. There are private companies, let us take as detail that it's, suppose paid up capital is 25 lakhs. Paid up capital 25 lakhs. My reserve and surplus is say 80 lakhs. My turnover is 1 crore 80 lakhs. And my other income is say 900 lakhs, 9 crores. So now the question is the CARO applicable to it? Think, because in the private limited company, the three conditions which are there, the three conditions have to be cumulative to be met to be exempt. That is, its paid up capital and reserves should be less than 1 crore, turnover less than, total revenue less than 10 crores, and outstanding loan less than 1 crore. So in this case, where my paid up capital is 25 lakhs, my reserve and surplus is 80 lakhs, which exceeds 1 crore, my turnover is 1 crore 80 lakhs, my other income is 9 crores, which is CARO applicable or not? The answer, maximum cases which I get is yes, that the CARO is applicable. But actually the answer is no, the CARO is not applicable. Why it is not applicable? Because it satisfies the conditions of being a small company. Because the definition of a small company today is when its paid up capital is less than 50 lakhs and turnover is less than 2 crores. So in this case, it satisfies this condition, hence it is a small company. So in this case, CARO is not applicable. Thank you very much for watching this video. Thank you. Namaste.